Hello, I'm Laurie Berke. I'm a principal at TABB Group. I have here with me today Doug Clark, who's Managing Director, Liquidity Research, ITG Canada. Doug, thank you for coming.
Thank you, Laurie.
So you've had some very significant changes on the regulatory front with reference to dark pools and dark trading in Canada. There's quite a bit of attention being drawn to both Canada and now Australia as well, who has taken somewhat the same tact as you have, and we're looking at what you're doing here in the United States. So what was the regulation? What was the intent? When did it happen?
So the rules went into place on October 15th last year, 2012. And essentially what they're trying to do is drive smaller orders into the lit market. So they've said that any order that's under both 5,000 shares and $100,000 in value, if it trades in a dark market, it has to get what they deem to be significant price improvement, which is a full tick, or if it's a one tick spread, it's a half tick.
So an order cannot trade in the dark unless it obtains price improvement, so it forces order flow into the lit market.
Yes.
So what was happening with dark versus lit in Canada that inspired this type of a rule, which we don't have here in the States, although we're talking about it? What was happening before and what's happened since?
So beforehand, in the couple of years before the rule, we did see dark pools arrive. We had 3 or 4. They had dark pools only, as we think of conventional dark pools, 5, 6, maybe 7% market share. But if we look at all dark liquidity, so you consider the upstairs market, the overall trading happening away from the lit venues had actually shrunk significantly. Back in 2000, 2001, roughly 40 to 45% of all trading was happening away from the lit venue. It may have been printed on the lit venue, but it wasn't actually matching there.
Right.
That number is down to, call it 20, 21, 22% now. So it's a significant reduction, but because it was happening in a dark pool instead of on an upstairs market blotter where there was no transparency around rule set, there was no methodology, there was no fair access, they're suddenly concerned about it, which seems a little odd.
So this fall off to 20-some-odd% of average daily trading volume is what part of that is directly attributable to the regulation itself?
So the dark pools, the pure dark pools as we talk about them, were, call it 6-7% before October 15th. They're now down to 3 or 4%. So it's a fairly decent drop.
Cut in half.
Yeah, one of the dark pools in particular charged nothing to post passively. You only gave up 1/10 of a penny price improvement. So it was not catering to HFT, but it was very friendly in the economics to HFT. The HFTs no longer want to play there. We've also seen a real reduction in the smaller price stocks. It's one thing to give up a half a tick price improvement on a $40 stock. Right. You're not going to do it on a $2 stock.
So let's talk about your review. You're responsible for quantitative research in Canada, liquidity research in Canada. So what is your opinion on this rule?
It seems to me to be an interesting policy response. And so let's look at it, Laurie, with an analogy. And let's take for a second, you wake up one morning and suddenly you've been placed in charge of the education system in the U.S. magically. And you walk in and you talk to your staff on day one and you say, okay, what's my biggest problem? What is the biggest concern with education in the United States? And they tell you the biggest concern is a hollowing out of the public school system. You're seeing a shift of people from public schools into private schools. And they're concerned that what's going to be left for those who didn't have the ability to get into private schools was going to be a weaker system. You say, okay, why is it happening? Well, we've polled everybody and it's because they're not happy with the public schools. They don't think they're secure. They think the teacher-to-student ratio is unsatisfactory. They don't like the food in the cafeteria. There's no longer any arts programs or extracurricular phys ed programs. Sports. So what can I do about it? And your staff tell you you've got 3 policy responses. 1, do nothing. The parents that are moving their kids into private schools are doing what's best for their kids. They have a best education obligation. They're taking care of it. 2, limit or ban private schools entirely. That'll get them back into the public schools. They're not going to self-teach these kids. Or 3, fix the public schools. Make them safer, get more teachers, add some arts programs. Very unlikely you're going to choose policy number 2. You may go with 1, you may go with 3, but you're not going to ban or limit private schools. That's the exact policy choice that the Canadians and Australians, and it seems like the Americans eventually, are taking on dark pools. Seems to me to be a flawed policy response.
Great analogy.
Thank you.
Good one. Thank you. Thank you. That's going to give our viewers at TabbFORUM something to think about and something to talk about. And we're absolutely certain that U.S. regulators will be turning their attention to this issue, if not tomorrow, then the day after. So thank you, Doug. It's good to have you here. We'll wrap it up at this point. I'm Laurie Berke at TABB Group. This is Doug Clark. He is a managing director at ITG Canada in charge of liquidity research.
Thanks, Laurie.
Thank you for watching.